Hi, my name is Aino Mardia. Today I will explain about Malaysia Islamic Treasury Bills. Firstly, what is Malaysia Islamic Treasury Bills? Malaysian Islamic Treasury Bills is short-term and long-term paper issued on conventional basis by Malaysian government to manage the economy. There are two issuers. The first one is Government of Malaysia and the second one is Bank Negara Malaysia. Malaysia Islamic Treasury Bills issued under Government Funding Act 1983. In the Acts of 637 and 275 is to authorize the federal government to raise the fund within Malaysia for development expenditures such as health insurance, retirement benefits, and national defense. It is also to refinance maturing debts. Next, I will explain about concept used in MITB, which is there are three concepts or principle that based on Sharia used in MITB, which by Innah, by Ad-Din, and Murabahah. Firstly, MITB are structured based on Murabahah concept, which is essentially a certificate of indebtedness arising from a deferred markup sale transaction of an asset such as commodity which complies with Sharia principles. Secondly, MITB also using the concept of al-bay ad-din, which is referred to sale of debt arising from a transaction in form of deferred payment sale. Lastly, it is also based on by al-innah contract, which is a trust certificate arising from sale and buyback of asset in Islamic finance. Now we are moving on to the process of MITB. If you look at the process above, the process is involved sales and buyback transaction between central bank and bank, which is the process also has the element of by al-innah. Okay, firstly, the central bank sells to the bank an asset on the deferred payment at the cost plus profit for the stipulated term. Then the bank sells the same asset to the central bank on cash basis at the price lower than purchase price. Then MITB will be traded based on by ad-din. The central bank can issue the MITB, then the bank present MITB and receive cash at maturity. Usually, MITB issued on basis of by al-innah with maturity tenure 3, 6, and 12 months.
Okay, next I will explain about Malaysia Islamic Treasury Bills features. MITB are issued by BNN on behalf of the government to raise short-term funds for the financing of government expenditure. Like the instruments are issued using Islamic principles which are deemed acceptable to Sharia requirement. MITB are issued and traded based on a discounted basis, and the tenures issued are between 21 days to 1 year. And zero credit risk is assigned as it is issued by Bank Negara Malaysia. Okay, next I will explain about Bank Negara Negotiable Note, which is BNN. BNN is a short-term instrument issued by the central bank and the structure based on the concept of buy al-innah, and it can be traded in the Islamic money market (IMM) secondary market based on the concept of buy al-dayn, a monetary policy instrument, and traded on a discount basis and payable at face value on maturity. The tenure up to 6 months and high liquidity in secondary market and have no credit risk.
Hi, my name is Ramya Sri and my matrix number is 01DKB21F1016. Now, let me continue our presentation by talking about Islamic accepted bills. First, let's talk about the definition of Islamic accepted bills. It is defined as a bill of exchange drawn on and accepted by a bank to finance a sale or purchase of goods and commodities. It is similar to the conventional bankers acceptance, and it is formulated on the principle of Murabahah, cost plus, and bay al-dayn debt trading. There are two types of financings under named as import and local purchase, exports, and local sales. Now, this is the operation mechanism of import and local purchase. Let's look at the next slide and I will explain the process one by one. As we can see in the diagram, bank appoint clients as a purchasing agent. The client will purchase the order for bank through supplier, and supplier will supply the goods to the bank agent. Bank will pay the purchase price to the supplier, and the bank will resell the goods that the client wants at a selling price, which is a cost plus profit price. At the time of maturity, client will make payment of the selling price to the bank. Now, let's look at this local sale and export. This diagram looks less complicated than the previous diagram. Let's look more further into the details in this diagram. In this financing, the client will sell the goods to the supplier. The supplier will pay to the client at the end of maturity date of the accepted bills. The client will sell the debt to the bank, and the bank will credit the discounted amount to the client. On the maturity date, the client will collect the debt from the supplier and pay to the bank. That's all from me. Thank you.
Hi, my name is Nordiana and my matrix number is 01DKB21F1022, and I'll be continuing the features. The first is Sharia principle, all murabaha, marked up sale, and buy al-dain, debt trading. Second is purpose, to finance local purchase or import and local sale or export. Third is financing amount, which is 100% of invoice amount. And then is profit margin, which is 3.5%. Next is tenor, 30 to 180 days. Payment of profit, which is maturity in arrears, for coincidence with operating cycles, not requires overdraft facility, and lower effective rate. And the last is acceptance commission, none under ABI financiality. The next topic I'll be talking about is requirement. The customer's declaration that no other source of finance, including under a lease, hire purchase, or factoring agreement, has been or would be obtained for the trade transaction concerned. The full set of commercial and or financial documents evidencing or acknowledging the trade transaction concerned. A receipt or other documentary evidence of payment in the case where the purchaser who is accepting the ABI has already made payment to the supplier prior to the creation of the ABI. And last is letter from the controller of foreign exchange authorizing the seller to extend credit terms beyond 6 months to non-resident purchasers in the case where the seller intends to draw an ABI with a tenor of more than 6 months to finance the sale of goods to a non-resident. Next is the Islamic accepted bill for financing import/export purchase, or ABI import. This is the formula for this. P is for market price or sale proceeds, IV is invoice value, R is annual rate of profit in percentages, and T is number of days remaining to maturity. Next is Islamic accepted bill for financing export/sale, or ABI export. This is the formula for it. P is for market price or sale proceeds, FV is face or maturity value, R is annual rate of profit in percentage, and T is number of days remaining to maturity. Next is import calculation. First, invoice, which is 384,429 ringgit. Second is profit rate, which is 3.5%. Third is tenor, 120 days. Next is profit amount, which is as shown. Upon issuance, bank purchase is RM 384,429 ringgit, but bank selling price is RM 388,852 ringgit and 57 cents. Next is upon maturity, which is 388,852 ringgit and 57 cents. bank selling price, and overall charges is RM 388,852 ringgit and 57 cents upon issuance plus upon maturity. We're gonna talk about the calculation export. Suppose an IUP with a face value of 3 million ringgit is sold at a discount of 5% and has 42 days remaining to maturity. What is the price of this IUP? Well, as shown with the formula, it will come out to 2,982,741 ringgit. Next, we'll be talking about the Sharia issue in Islamic accepted bills. Number 1. Whether the trading of debt to the third party is allowed in Islam. Most Hanafi, Hanbali, and Shafi'i jurists view that the sale of Bay al-Dain to non-debtor or third party is not permissible. Second is trading of debt Bay al-Dain to the third party at discount price. It is impermissible, haram in the Middle East, and permissible or halal in Malaysia. That is all from me. Thank you. Bye.